But just before we get underway, I should also give a reminder of our sponsors that have put in so much work in order for today to be so successful. We have to thank our sponsors, our platinum sponsor, Ajman Media City Free Zone. Also our silver sponsors, Rakeez, Shira and the Creative Zone. We thank you for your support in order for making today so successful. And we've got a challenge because our last panel on taxation proved to be very popular in order to have a lot of questions. So we look forward to this panel to be as equally as informative. Adapting to change, corporate tax and auditing in the UAE. And in this final panel of today, we're looking to explore the dynamic environment of corporate tax and auditing in the UAE, focusing on recent regulatory updates, the implications for businesses and best practices for compliances and also efficiency. This positive step follows in the footsteps of neighbouring Gulf states like Bahrain, which have already implemented corporate tax regulations for exploration and hydrocarbon firms. By aligning with international tax standards, the UAE... Have we got a microphone upstairs? Is that what we can hear? The UAE aims to ease the financial burden on local businesses while also protecting the interests of startups and other small enterprises. So our experts on stage are going to be discussing many of the key challenges faced by businesses and strategies to navigate these changes successfully. We thank on stage Naveen Sharma, the founder and chairman of the Taxation Society in the UAE and the ex-chairman of the ICAI. Thank you so much. Sheetal Soni, partner MICS International TMCC. Thank you. Jason Mandapathil, manager compliance and assurance at Hussein Al Shamsi Chartered Accountants. And also Munir Al Wafa, founder and CEO of the Al Wafa Group. Great to have you on stage for this final panel. Can we give them a round of applause, please, ladies and gentlemen? Naveen, we need to find, have we got a spare microphone for you somewhere? If we can pass one, oh, you've got one there, excellent. Naveen, starting more broadly, how has the implementation of corporate tax changed auditing, accounting and financial reporting in the UAE?
The changes due to corporate tax, I think it's a very simple question. It changed dramatically. It's just the opposite. Now, we have to, because the corporate tax is applicable on each and every transaction, registration is compulsory under corporate tax, and we, following the articles, ministerial decisions, examples in the guides, FAQs are all very part of the profit which we calculate. So it has changed everything. Even now, revenue more than AED 50 million, auditing is compulsory. For transfer pricing, you have to maintain the arm's length transaction. And in addition to it, what we have to ensure that we have to make sure that related party transaction, connected party transaction, entertainment expenses, all are available. In essence, I can say that a new shareholder is included in each and every business, which is the UAE government, and they will come and inspect you as per the timeline given in the corporate tax law. So now, henceforth, the most important thing is the compliance. As we all know, UAE is following a very simple tax regime. What is expected from us is to make sure that there is 100% compliance, documents are available, and now documents in this era has to be all electronically. So we have to have the exit certificate, we have to have the invoices ready, we have to make sure that we have the agreements, even the way the UAE were doing the business, like group companies, visa in one company, working in another companies. Sometimes you have the bill, sometimes you don't have the bill. Everything is changed now, and this is a great opportunity for the auditing, accounting, and all professionals. That's why we can say post-lunch so much crowd listening to the Gulf News, and Gulf News is hosting this seminar on the corporate tax.
Yeah, it's a great opportunity. I tend to agree. Sheetal, in your experience, and you're working with MICS, as I can tell from the work shirt you've got on so proudly, How do you think the changes in the tax laws have impacted the strategic financial planning within the company?
See, first of all, good afternoon, everyone. As Naveenji said, even post-lunch, so many people listening to us, I was thinking that very few of us would be left here. So thanks for listening to this probably boring topic. And Chris, I have to give it to you. I mean, since morning you have been doing a great job and making us the agent of the spreading the bad news in the market. But okay, good to have here.
Thank you. It's easy for me. I ask the questions. I don't need to know the knowledge. So
Yeah.
thank you.
So, see, I mean, I'm sure a lot of you who are married, sometimes your wife tells you that I will today make one pot meal, or probably not, I'll not make any meal today, will go out. So what one pot meal, as Naveenji was trying to say, will no longer exist as far as UAE is concerned and as far as the accounting is concerned. You have to have, because of the corporate taxation, since 2018, first the VAT came into play. It was not easy to implement VAT, and that was only targeting the top line. If, accountant in the room probably understand, the top line, managing a top line in books of accounts is easy, and even segregating them in the books of accounts is easy. But when you have to dissect the P&L till the bottom line, then a lot of other expenses come into play. And that particular change in the accounting systems is one of the important things that you have to bear in mind. The second thing, managing your shareholders and CEOs' expectation to pay optimum taxation or to pay as low as tax as you can. And that is another level of challenge that you have to maintain, because the tax law, as much as we want, is not simple. Unfortunately, in fact, there are a lot of reliefs which has been extended by the CT law, and if you have to be mindful of the reliefs that are out there. If you are a small business, you have to, you can claim that moving from no tax period, which is say end of 2023, to a tax period, which is 1st Jan 2024, you can claim number of reliefs, particularly say, for example, you are sitting on a piece of parcel of land which is acquired 10 years back. You don't want to pay taxes on the gains that happened on that piece of parcel of the land, right? So there are provisions in CT law which allows you to take the benefit of, these reliefs and not to optimize your tax liability in your first period. So there are a number of such examples that I can give you, and your system readiness is so important in order to, deal with optimizations.
Thank you, Sheetal. And I want to know what's in your coffee each morning, because you can talk like that at 2:40. We appreciate your passion. Jason, looking at some of the areas of taxation, it's an ongoing topic about minimizing tax. We had it in the last panel. You just spoke about it as well. Shareholders and owners are thinking 9% is out of the bottom line. How do we get access to this? But one of the ways is transfer pricing. For multinational companies that are based here in the UAE, is that transfer pricing available? And this is getting more technical, is there a minimum acceptable transfer price between businesses?
Okay, that's actually a very vast question that's asked by Chris right now, because when we talk about transfer pricing, it's like an endless ocean, right? I've attended classes where, the sessions go on for about 4 days just talking deeply into transfer pricing. But to simply put it out over here, right, transfer pricing or arm's length pricing is very much required or very much stressed upon by the UAE corporate tax over here. And especially when we deal with multinational corporations, they're saying the related party transactions or your transfer pricing or arm's length pricing is applicable for each and every single businesses. But a detailed level of documentation comes in place once you cross a certain threshold. So when we're talking about MNCs or anybody part of an MNC with the global revenue of 750 million euros, or if you're a local company out here in the UAE, but your revenues are crossing a 200 million dirhams threshold, then the detailed level of documentation of transfer pricing is applicable here. But nonetheless, it's very much stressed on by the UAE corporate tax that arm's length pricing or transfer pricing rules must be followed by each and every single business out here in the UAE. And on the second part of your question where you said, is there a minimum or a threshold or an acceptable transfer pricing range? Well, it's never a straight answer, to be honest. There are multiple ways to compute transfer pricing, and it depends on what kind of activity you're doing. There is a comparable uncontrolled pricing method, a net transaction method, and to be honest, when the transfer pricing experts get into it, they will have to dissect your transactions and find out which method suits you. And of course, it's never a hard and fast rule or a hard and fast figure out here, but rather it's a level. Roughly, I mean, usually, generally, it goes about 5 to 10% here and there with the computed range, but that would be more of the threshold that's acceptable out here.
So they're often, yes, sorry,
I
go
would
on.
like to add here, for low value services, the minimum threshold amount that's been prescribed as per CT guideline is around 5%. So there are certain low value services, the 5% is the bare minimum, that's the floor that has been defined. But of course, as we advisors can make anything complex. And, I mean, there are so much, I mean, the CT law here is about 60 pages. But the transfer pricing guidelines documents, which has been adopted by the CT law that is prescribed by OECD, is about 780 pages. So you can imagine how complex it can potentially be, right? When we try to get into transfer
I
pricing.
want to get out of here by 4 o'clock, so maybe we can, we can move on. And I want to bring at this point, bring in Munir, because we've spoken about big businesses. We've heard from what it's like for multinationals and transfer pricing. But one of the great things about the UAE is it's also the home of the entrepreneur. This is where an entrepreneur can make their dreams come into a reality. From that entrepreneur's perspective, how has the launch of corporate tax changed the business environment?
Very good afternoon, and thank you so much for the question and amazing crowd. It's really going to make every entrepreneur well-disciplined, first of all, financially disciplined. And from my point of view, and in our companies, what we have done is that we just put it into 3 ways. One is the expertise, okay? The next one is the process, and the third one is technology. Once you implement all these 3 in place, especially the largest economy catering, the SMEs, the SME is the backbone of every industry and every country. We belong to representing the, SME segment. What we believe is that you have to have the expertise from the experts. Don't be a doctor by yourself. Don't, learn from the University of WhatsApp and implement the things. Instead, go to the chartered accountant, go to the auditors, go to the experts, and take their advices properly and get things done. Then streamline your yeah.
Well, I was going to ask about what are some of the steps to help businesses comply, but I think you're answering that question in terms of, and Richard Branson always says this, leverage of other people's experience. The UAE's got this environment, so that first step really should be, if you're unsure, ask the questions and leverage off so many opportunities that you have to help with this introduction.
Yeah, I get you.
Oh, okay. Well, that's fair enough. I'm an Australian, I can talk quickly. So the opportunities are that if you're unsure, to leverage off companies, businesses with experience to help with the change.
Yeah. Definitely, this is a great opportunity to streamline your, process of doing business, first of all, because we have been doing, and I know many of my friends, entrepreneurs, what they do, they see there are money, there are, in the figures, but they don't know whether they really have money in hand. Then they are facing a lot of challenges. When it comes to the real challenge, they, the accountants, what they say, like, sir, we don't have enough funds. The fund flow is having some challenges. For now, when you are really streamlined and this complaints is coming in line with the, government authorities, what we make government as a partner for our business. These are, when you have a partner in your business, you are accountable and you are streamlined, and you're answerable to every single question a partner is asking you. And most of the entrepreneurs, single-handedly, they do anything and whatever they want. They don't know where money is coming from. They don't know what they are spending into. This is a reality and ground reality what we are facing here. Here now, we have a control. Now we have a challenge that, okay, government is partnered with our business and they are entitled to get 9% of our profit. So we are absolutely under control and radar. So we make sure that our business is going in hand with all the compliances and regulations of this country. That makes us clean, clear, so that we'll not have a problem in paying the staff, in paying the rents. And in paying every single thing, we know where we are standing. We don't take any unwanted risks. Our risk will be calculated because we are answerable to someone. When you are answerable to someone, as an employee, an employer started working on. And every employer becomes an employee in their own company. In that way, we will be definitely getting into the way that, every single SME is transparent, clean, clear, and they'll be winning. It is not that, see, when someone is taking your money, they are giving you something in return. The government is giving us back what exactly we were missing since many years in this country. So that we say that this is the best opportunity for every single sole proprietor or any SME businessman to streamline your business and make sure that you are guaranteeing your success for your generations and for tomorrow.
Yeah, that's an inspiring position, and I can see that also Naveen is nodding his head in full agreement of this. But, moving back specifically more about some of the questions about tax, simply, is it possible to change the start and end of date of your tax period?
Yes, it is possible to change. So one fundamental thing which we all have to understand, that you are running your own business. And if there is a need to change, there is absolutely no denial from the government side. Article 58, you can change your tax period subject to approval of the FTA if there is a need. Need may be liquidation. Need may be you want to be a part of the tax group. Or need may be that you want to short or extend. Even the law is giving you the option that instead of 12 months, you can reduce to 6 months, or you can increase to 18 months. But you have to justify. Is it company in the liquidation? Are you going to part of a tax group? So we have to have a valid business reason and approach with the government in time, and subject to other laws of the core city law, you can always change your tax period.
So the government is being quite flexible.
Yes. There is a specific provision about it, Article 58.
Sheetal wants to
I would like to add here one more thing in addition to what Naveenji said, is, not only you can change the tax period, but also for your first tax period, the law is extremely flexible as well. Whatever in other part of the jurisdictions or major, mature tax jurisdictions, you will see that tax period is defined by the tax law, because tax authorities don't want different tax period to be, to manage. Here in UAE, they have given us very flexible, if you can choose your tax period from Jan to December, or from April to March, or from February to Jan even. So it's up to you. You choose your tax period, your return filing is after 9 months of the tax period, and tax payment is after 9 months. So, there is great amount of flexibility at the first tax period as well as going forward. But, however, there are certain challenges.
Yes.
Yeah, which is like if you want to make a tax group, then all your companies need to have the same tax period, because otherwise, how would you do that? So those are the things that you have to keep in mind.
So be mindful when you're a successful multimillionaire with multi-businesses, they've all got to come under that same tax period. You can't move it around. Where I come from in Australia, if you mention the word audit, it scares you, because you think you've done something wrong and the tax man is coming after you. Jason, in the UAE, who needs a corporate tax audit? And is an audit mandatory for corporate tax in the UAE?
Right. But before I get into the answer where you mentioned, right, where you hear audit, you get scared thinking that there's something wrong, right? But I believe that in the coming years, this mindset or this thought would slowly shift from being, scared of being audited to something that would be an annual compliance for you to make sure that, to get the feeling that you're going smoothly, you're going right. Now, when we talk about the audit bit of it, with respect to the corporate tax law in specific, they say mandatory audit is applicable for two sets of people. First set of people where they say if your revenue, your turnover is exceeding 50 million dirhams, or for the other set of people, that is, if you're a qualifying free zone person, then you have to get yourself mandatorily audited. But if I have to keep aside the corporate tax law, we already have a commercial companies law, Federal Decree Law 32 of 21, that talks about annual audit for each and every company, regardless whether you have corporate tax or not. So even before the implementation of corporate tax, the requirement of getting annually audited was in place, but never really looked into or sought by the authorities yet. But with the implementation of corporate tax, it becomes even more stringent and more streamlined. Now they're saying they don't want to burden each and every sectors, especially the SME sector out. So they've kept two sets of criteria, two thresholds. If you're above these or if you're falling in these thresholds, get yourself mandatory audited.
So really that audit is a bit like jumping on the scales. If you've been looking after yourself and everything's okay, there's not a problem. Nothing to be scared of.
Exactly.
But I'd like to add, don't forget, I mean, the law is saying that over and above 50 million dirhams you have a turnover, you have to mandatorily audit. But then I mean, where people probably will fall in trap here is, I mean, FTA says that we can call for audited statement any point of time later on as well, right, during the course of the assessment. And one doesn't want to be in a situation wherein, you have already submitted your return, you have paid your taxes, and then they ask you to get your accounts audited, and then your auditor plays difficult with you and trying to change your, or modify your books of accounts. And that's where your situation will be difficult. So I would rather, conservatively advise all our clients to get their accounts audited, because this is simple piece. It's like your wife saying, do whatever you want, and then, and then she keeps track of you.
That means you better not do what you want to do. We've all been there in that situation. Any questions? Because we've got a great panel up here of experts. Any questions for anyone before we finish up of today's panel? Because they can share what is going to be an incredibly tough position. Opening it up to the four of you, I have a question. The UAE have introduced a GAAR, General Anti-Abuse Rule. Could any of you maybe explain where does the GAAR apply?
I think GAAR, before I reply, see Article 50, what we say in corporate tax is GAR. Generally accepted, what we say anti-avoidance rules. So if you are free to do whatever you want to do. But the sole purpose should not be to save tax. Say, for example, if you want to shift your mainland operation to free zone, you can do that, but there should be economic reason, not the only reason of tax. But not only the GAR, in the Western world or the Eastern world where we have taxes for hundreds of years, there is another terminology called SAR, specific anti-avoidance rules. So, generally and specifically, so both the basis is that you are free to do your tax planning. It is your birthright to save tax, but do it in the spirit of the law. The spirit of the law means that you should not be just aiming to save the tax law and do whatever is possible. It should be the byproduct, not the product itself. So everybody is, whenever we are advising our clients or our companies where we are working, we have to do the tax planning. That's why we all are here. But we have to make sure that there is economic reason and there is a substance. It should not be just a fraud and go from one place to another place and do the transaction. And the only aim of the transaction is to save tax.
I can see Sheetal. What a surprise. You've got something to add, yes?
Yeah, I would add here. I mean, normally in finance and accounting, you will see non-creative people, less creative people. But sometimes even creative people become accountants, right? And that's where we try to do, say, financial engineering or accounting engineering. So if you try to do accounting engineering in order to minimize tax or avoid tax, that is what the law doesn't want for GAAR, General Anti-Abuse Regulation. So if you want to go and say that this is how I have been doing business before, but now because tax law is coming, I am trying to do this in a different way, that's where they will gonna come and catch you. As one of the earlier sessions, somebody told that, if you have 5 businesses running into one trade license and now you want to split those 5 businesses into 5 trade licenses in order to claim small business relief, this probably get into GAAR. There are many other examples like this which can potentially get into GAAR. We try to, you try to form 5 different entities, or you transfer the businesses in your wife's name, in order to avoid taxation, then you will fall into that trap.
I can see Jason because wants to add, because I mean historically, a lot of countries culturally we've grown up with minimising tax policies, and here when it's brand new, everyone's suddenly looking to jump on that. Jason, I can see you just like to add.
Yeah, just to add with both of them, how they've rightly said, right? Now the tax law over here is very novel. It's very young, very immature yet, and there's a lot of loopholes, or there's a lot of gaps that they need to fill over the coming years. And they've done a very brilliant role in placing an open-ended article in the tax law saying that if they feel there's anything that is done to gain undue advantage of the tax, then they have a very subjective or a very judgmental power wherein they can step in and reverse that undue advantage that was taken and make them pay a tax. So I believe this is like a fail-safe that they've placed just in case they fall between the thin line between tax planning, tax avoidance.
Yes.
To say that this is very important provision. I mean, there's only one
I
provision
want to
in the
get
law.
to Munir up in the end. He's sitting here waiting to answer.
Just sorry for this one last bit. This provision of GAR is the only provision in the law which is effective from the date the law was published. All other provisions of the law was, applicable, from 1st June. The law is applicable from 1st June 2023. This provision is applicable from the day the law was published. So you could not change anything in order to optimize your tax position, and before even the tax law coming into play. So that's an important point to note.
Excellent. Munir, thank you for being so patient. Your thoughts, when we look at the situation in regards to tax, for a business who's starting out, are there essential steps they should take to ensure ongoing compliance? To ensure ongoing compliance with the UAE's tax laws, I've got a new business. What are the 2 or 3 main steps I should be starting today to stay within the law?
That's a very good question, by the way. And first of all, one is that, as I mentioned in the earlier, you have to get trained properly. Your personals in your office or in your company has to be well trained by the expertise. That is number one. Number 2, your technology has to be enabled in line with the latest amendments and latest comprehensions. That is number 2. And third thing, not only for the companies, but I would like to request the experts, chartered accountants, auditors, to make training or consultancy as one of the product or services they are going to sell. Not only registration, not only filing their stuff. Instead of that, training has to be, and creating awareness among 700,000 registered companies in the UAE or in Dubai, whatever you say. Those companies are, 50% of them are not really aware of what is happening around. Because most of them, the owners are, not in place sometimes, they are not really updated because they are busy running and making money, and they don't understand what exactly. Many of them are not very well educated, who can really do and understand things. And even for Gulf News have a big role to play in the community development, to train the people in order to make them understand what is it and what are the consequences if we don't adhere to the laws and rules and regulations of the country. And being an entrepreneur, we started, training the people, getting the, experts on board, and implementing the technology amendments according to the, because for example, if you have an ERP, and if you don't know what is the entertainment tax, how it has to be divided, which comes under corporate tax, which doesn't come under this thing. And your own expenses, what are the things, your car loans, for example, your staff, kids' education. Many of the people say that being a CEO, I can raise up my salary, whatever I like. But it's not the real thing. And they will be getting caught at the end, and they have a cross mark from the government authority say, you are fined. Instead of that, why don't these, experts get into the market, get into the layman, and make them understand what exactly corporate tax is all about?
Get their hands dirty.
Yes.
find out what it is. Any final questions? It's your last chance today. If anyone does have a question for our panel today, if not, it's because they've successfully answered every question about taxation apart from the transfer pricing rule. I think that's the way we can equally do this. Thank you, our panelists. Naveen Sharma, the founder and chairman of the Taxation Society in the UAE and the ex-chairman of ICAI. Shital Soni, partner MICS International DMCC. Jason Mandapathal, manager compliance and insurance for Hussein Al Shemzi Chartered Accountants, and Munir Al Wafa, founder and CEO of the Al Wafa Group. Pleased to give them a round of applause for having the final of today's panel discussion, Corporate Tax and Auditing in the UAE, Adapting to Change Corporate Tax